Welcome to the Capital News. I'm your host, Alex Karitis. Today is Monday, December 28th, 2020. Thank you so much for joining me. I hope you all enjoyed your weekend and your Christmas. Title of today's podcast, More Cash in Your Stocking. So I know it's already a few days past Christmas, but I hope you still have those stockings hanging up because you're going to get some more cash. Because President Trump caved. It was a disastrous bill. It was a disgrace, despicable, whatever he called it last week. The $900 billion monstrosity. We applauded the president for calling it out with all the pork barrel spending. That's par for the course. But at least he finally called it out. But he signed it. And of course, I'm sure there was a lot of political pressure for him to sign it. We still have the Senate race, the runoffs down in the state of Georgia. I'm sure those Republican candidates and incumbents were getting a little bit nervous because that would have been a lot of ammunition for their Democratic Party opponents. Now, we'll see what happens. That race is going to take place in a few short days. And of course, there's going to be a ton of attention placed on that race down in Georgia, and we will keep you posted on some of those updates. But President Trump signed this bill into law. No surprise here. Just the other day, episode 500. More spending is never enough. So, we're going to get sent out another $600 check for those making $75,000 or less individually, couples at $150,000 or less. And then today, because the president called out this bill and said $600 isn't enough, make it $2,000. Of course, we don't have this money, folks. I mean, this is like Tinkerbell sprinkling fairy dust on everybody. Okay, this is where it's coming from. We don't have it. So 600 isn't enough. Let's triple it. Let's make it 2,000. And now, of course, the Democrats are more than happy to sign off on that. And the House passed that measure today, increasing the amount to $2,000. It's now going off to the Senate, controlled by the GOP. So we'll see what the Republicans do. Now, of course, now, several months into this train wreck of shutting down the economy, the Republicans are now concerned with the deficit and the national debt, yada, yada, yada. I'm not buying it. This is why I tell you guys to leave these parties. These people do not care for you. And you have to understand this. I am against all of these bailouts. Those of you who have been with me know this. But I am against all of these bailouts for everybody and everything. We don't have the money. There is no easy solution here. There's no flip of the switch that's just going to solve everything. There's no debt jubilee. There's no massive debt forgiveness that is just going to solve all of these problems. One man's debt is another man's asset. Never hear of insurance companies, pension plans, retirement accounts? Corporations hold treasuries on their books to gain some interest, to float some money. University endowments, unions, everything. There is no easy way out of this. But continuing with this insanity, continuing with these train wreck policies is ludicrous. It's un-American. It's immoral and it's unethical. Because the people who are going to have to pay the highest price with all of this are young people in future generations that don't even exist are going to have to pay for something that they had absolutely nothing to do with. That to me is criminal. And again, it's immoral, unethical, and un-American. Yet we keep marching down the same path and nobody says a damn thing. And nobody cares. And of course, we're going to talk about market performance. We have stock markets all over the place hitting all-time highs. A lot of this off of this news. Because, we're going to print another, God knows how much more money, but enough to give everybody $600, maybe $2,000, plus everything else that they're doing. all the pork, the $1.4 trillion spending bill just to keep the lights on. When is it going to stop? Not for a long time. Because we already have Nobody Cares Act number 1. Now we have Nobody Cares Act number 2. We will have 3.0, and we'll probably have 4.0. And it might go further than that. Because when the other idiot is sworn into office in a few weeks, guess what? He's going to want to make a statement. Joe Biden and company are going to want to make a statement. And if the Democrats should win in the state of Georgia, well, then God help us all with what these people are going to push through. We are broke. So, that's that. Trump caved. No surprise. What's going to happen with all that pork spending, right? We'll be paying for that too, one way or another. Market performance. Let's look at the dollar index, see where we are. Trading at a 90 handle, 90.12 at the time of the podcast. A little bit of weakness overnight. No drastic moves across any of the major pairs, so we'll ignore the rest of it. On the index front, overnight futures trading, we have the Dow Jones Industrial Average gaining 0.6%. Same for the S&P 500 and for the NASDAQ 100. So they're all moving together. All-time highs here. The Nikkei, the Japanese market cash trade, is up 2.5%, gaining 670 points, taking the Japanese exchange to a 30-year high. Got to go all the way back because remember, a massive blow-off top with Japan, late 80s, early 90s. But the Japanese Nikkei is trading at 27,524 points. Its all-time high was around 39,000. All right? Took them 30 years to get back to this point. Same thing is going to happen again. Across the pond in Europe, pretty much a sea of green. Flat in the UK, up 1.5% in Germany, up 1.2% in France, up 0.4% in Italy, and gaining 0.5% in Spain. Cash trade in Australia, they're relatively flat. South Korean markets also hitting all-time highs. Indian exchanges also hitting all-time highs. It's one after the next, folks. New Zealand markets hitting all-time highs. Look, you got a printing press. At some point, I guess everything just breaks and everything just goes up. There's no more markets. And when you listen to a lot of these people, Fox Business, CNBC, Bloomberg, whatever, what are these people getting paid for? I'm not talking about the hosts and the analysts on the station, really, but the money managers that come on. What are they doing? Why do these people still have a job? What analysis are they conducting? They don't have to do anything. Markets just go up. If anything happens and they should go down, one central bank after the next and in conjunction are just going to print money to get everything to go up. So why are you paying all of these people all of these fees to manage your money? It doesn't make any sense. They shouldn't be there. More real estate can be opened up. These people don't need to work. I never hear any of them say that, though. Because what are they doing? What analysis are they conducting? Seriously. The fundamentals are gone for the time being. They'll come back. But these people don't say that. They just say it's going to keep going up. They just keep praising the Federal Reserve, the ECB, the BOJ. That's all they do. That's a legitimate question. I think they're going to talk themselves out of the job and they don't even realize it. On the share price front, just to catch some of this here, because again, we have the NASDAQ hitting all-time highs, and these are the big boys here. So Apple gained 3.5% today. Tesla gained 0.33%. Microsoft gaining 1% for the day. And Amazon and Facebook both gaining about 3.5 percentage points in a single day. These are huge companies, and a lot of these guys are just trading like penny stocks. But that's what happens. So I think something's going on in these markets. Obviously, they're all busted, manipulated. Take your pick. That's all you got. On the commodity front, we have WTI trading at $47.85 a barrel. Brent is at $51. Natural gas got hit today pretty hard, trading at $2.29. Gold and silver both had a decent day. Gold is currently at $1,878 an ounce, and silver is trading at $26.11. I'd like to see a stronger upward thrust with both of these precious metals, especially silver, over the next, well, really next couple of weeks. And if that's the case, then I think we're going to make a nice leg higher early in 2021. But anything can, of course, happen. And they should be much higher as far as I'm concerned, fundamentally speaking. But again, these markets are broken and they're manipulated. Because when we look at all of the money printing, last week we talked about, a few times we talked about the Federal Reserve's balance sheet, the national debt, how it all ties together. The fundamentals are just, they're all set. The stage is set for a long-term bull market in the precious metal space. But we'll see what happens. Uncle Sam's 10-year junk note is yielding 0.94%. Now, one would think, again, as we've been stating here many times, if it's a risk-on event, then shouldn't everybody be selling Uncle Sam's debt? All that junk. It's not priced as junk because the yields would be a lot higher, but that's my point. These yields should be a lot higher. If everybody wants to get into the stock market because, Santa Claus is coming back to town with another $600, maybe another $2,000, let's just throw it all into the stock market. So what are you going to be with treasuries for? These yields should be much higher. But the bond market is also busted. It's also manipulated. And that leads me to another question with respect to how much more spending is Congress going to approve over the next year. Your guess is as good as mine. I think it's going to be a couple more trillion, maybe a few more trillion. Of course, a couple few that we don't have and are not going to have, which is why the Federal Reserve's balance sheet is likely to hit $10 trillion by the end of next year, if not higher. But with that, that means something. That means that the government is going to have to issue a lot of debt, right? They're going to have to issue a lot of bonds and notes and bills. Well, who's going to pay for them? Who's going to buy them? Because we're not the only banana republic running a circus right now, ladies and gentlemen. This is happening everywhere. The Chinese are buying Chinese debt. The Japanese are buying Japanese debt. The ECB is buying European debt, etc., etc. So the buyer, really here, of last resort is the Federal Reserve. They're supposed to be the lender of last resort. They're buying everything. It's ridiculous, and nobody calls this out. Now, nobody ever calls this out. In fact, these people are applauded. Jay Powell, chairman of the Federal Reserve, is applauded. Christine Lagarde, president of the ECB, is applauded. And all the other idiots, they're applauded. Every financial news network is kissing their butts to get an interview with them. It's insanity. Now, what else do I want to talk about? I want to talk about initial claims because those figures came out last Wednesday. Obviously, last week was a short week. This week will also be a short week with New Year's Eve and New Year's. But nonetheless, the Department of Labor released initial claims for the week ending December 19th, and that figure came in at 803,000. Another heartbreaking figure. Now, this was better than expected, but 803,000 is still a terrible number. It is still very much so in the wrong direction. Revision for the prior week of December 12th is now at 892,000. That is up 7,000 from the initial report from last week. I cannot recall the last time there was a downward revision. I really can't. I think it's been several months. Continuing jobless claims, which lags a week, so this is for the week ending December 12th, came in at 5.3 million. That's a decrease from the prior week of 170,000. So again, that continues in the right direction. But so many people have been unemployed for so long, their benefits have expired. And with the passage of this monstrosity, we're going to continue to have distortionary effects within the job market. Who's really getting rehired? If they're getting rehired, what type of money are they making? Do they still get benefits, or has their employer slashed benefits in order to keep the company solvent? You know, this is not back to normal, not even close. Okay? Then when we take into everything, all of these programs, regular state, federal employees, newly discharged veterans, the PUA and the PEUC, both children of the Nobody Cares Act, extended benefits, state additional benefits, and work share, we get a grand total of 20,363,000. So let's just round it up, 20.4 million for the week ending December 5th. The grand total figure lags a couple of weeks. The week-over-week change for the grand total is a decrease of 283,000, which is in the right direction, but we're still north of 20 million in all of these programs. The biggest decrease was seen in regular state benefits, down 308,000. And let's see here, our biggest increase was in the PUA and in extended benefits, which is not a surprise because this is structural. These are structural issues. There are permanent job losers, which we focus on first Friday of every month when we look at the jobs report. The long-term unemployed, these numbers are unfortunately getting worse, not better. And this is no surprise. So now with this $900 billion bill coming to pass, we're going to get, I think, another 10, 11 weeks of unemployment. And then the $600 check. Maybe $2,000 check. So that basically takes us to the end of March. So the end of the first quarter. And then what happens? Same stuff. More spending is never enough. A nation of debt. Nobody Cares Act 2.0, 3.0, 4.0. They're not done. They are not done. You cannot flip the switch, shut it down, a $20 trillion economy, and think you're just going to flip the switch and everything's going to go back to normal the way it was. It's not how it works. Not to mention the amount of zombie corporations walking the land, the amount of malinvestment sloshing through the system, and just simply the total amount of debt. Extremely unhealthy. But we're going to continue to do it because that's all they know how to do, and they're not going to take any responsibility. And a lot of people who are benefiting from this couldn't care less about the principles and the ethics and the morality of all of this. As long as their numbers are going up on their computer screen, their accounts going up, they couldn't care less. But they will when reality hits, when these markets connect to the fundamentals and people start to lose money, then they'll start to pay attention. And as Jim Chanos puts it, this is going to be known as the golden age of fraud. Jim Chanos, the famed short seller. Talk about him here every once in a while. He's one of the few people that I listen to when they speak. The golden age of fraud. And as he puts it, and he teaches, I believe, a financial history course from time to time, he notes that the fraud cycle follows the financial cycle, the credit cycle, the business cycle. So we still ain't seen nothing yet. All of these companies that everybody's just piling into, these IPOs, all of these storied stocks that can just reach the sky. You watch what's going to happen when reality hits. So that's initial jobless claims. Again, almost 20.4 million Americans still claiming some type of benefit. And if you use that number against what the DOL cites here in their own report, you're about an unemployment rate, if you will, of about 13.9%. So basically double the quote-unquote official number that the Bureau of Labor Statistics puts out. And of course, we'll see that nonsense the first Friday of January. And of course, we will take the time to go through that report. So that's initial jobless claims. Let's look at the Federal Reserve's balance sheet, shall we? $7.404 trillion. This is another all-time high, increasing, let's see here, about $40 billion, which you can barely tell by looking at this graph that slight increase represents that much money. Remember, millions, billions, and trillions. A trillion is a million millions. It's 12 zeros. It's becoming a millionaire a million times over. It's very difficult for the human mind to understand and to grasp these numbers, which might be the reason why nobody says anything or not much of anything about these numbers, because they can't comprehend them. But you look at these graphs, and I always encourage you to do so. Federal Reserve economic data. Type in assets, and it should pop right up. And you look at this graph, and you can see that it's an increase week over week of $40 billion, but it barely registers. Had this been a decade ago, 2 decades ago, it would have been like a vertical line. Now it's nothing. Nobody cares. M1 money stock, also hitting an all-time high. $6.742 trillion, an increase week over week of, let's see here, about 158 billion or so. And that almost barely registers too. Again, look this up. M1 money stock. You want to talk about a vertical line? I mean, this makes no sense whatsoever. We talked about the Fed's balance sheet last week, sort of like the step-like pattern you can see. I mean, with respect to M1 money stock, what I'm looking at here, there's no step here. This is a vertical. This is a vertical face. This is like climbing a mountain straight up. This is insanity. This is a banana republic. I mean, seriously, to see these types of charts, to see these types of graphs, that's what you have to look at. You have to look at Argentina. You have to look at Venezuela. I am looking at the United States of America. Those are now the comparisons, and we are just getting started. That's the scary thing. The broader aggregate M2 money stock also hitting an all-time high, $19.299 trillion, an increase, let's see here, of about 70 billion or so, which again barely registers. And if you look at this, this is another vertical chart. It's completely unsustainable. You don't need to be a mathematician or economist to understand this. It's why I urge all of you to take a quick minute and to just look at these graphs, and you can say, well, this is unsustainable. This cannot be. What is going on here? Well, this is the management of the bankruptcy of the United States. It's also the rats abandoning ship, but abandoning ship and they're taking everything with them. Keep the people distracted with what's ever on Fox News or CNN or MSNBC. Keep them distracted with that crap, while the real criminals are running away with trillions of dollars. Our money, by the way. Just stay focused. And then, of course, we had the bad news of the Nashville, Tennessee bombing. Thank God it wasn't a huge disaster in terms of loss of life, but there was obviously a lot of property and structural damage. And I'm sure there's a ton of theories out there, and conspiracy theories abound on the internet. We'll wait for the story, the quote-unquote official story that the FBI wants to feed us. Will we ever know the truth? Who knows? Your guess is as good as mine. I'll keep you somewhat updated on it, but I mean, I'm not an investigative journalist. I'm not down there in Nashville. There's really not much more that I can add as far as analysis or anything like that. There's people talking about that it was, AT&T had something to do with 5G perhaps, and, it could be anything. Could be anything. But we'll see what the official story is. And then in the last couple minutes, this will probably end up being the topic of a future podcast at some point. I'm sort of thinking out loud here with you guys. You may have heard this term. Maybe I've mentioned it before, but this is becoming mainstream now, too. The Great Reset. The Great Reset. This is being talked about around the globe. What are they talking about? And, of course, they, the powers that be, politicians, central bankers, the same idiots that we always talk about, right? The Great Reset. What does that mean? Now, to me, you talk about a Great Reset, one of the most pressing challenges right now is, of course, the global economy. So what are they doing? What are they talking about? What are they thinking? What do they have planned for us, the peasants, right? What do they have planned? Because there's no such thing as a free lunch. The Great Reset. It almost seems like they want to they want to implement some sort of debt jubilee, some sort of debt forgiveness. But as I just stated, there's no free lunch. This will be making a deal with the devil, I think, if that's what they attempt to do. Because what will they say? Governments, central banks. Well, we'll forgive you your debts. We'll write them off, or we'll print the money. We'll throw it in your account. And, that's the deal. You just have to pay off whoever you owe. Bing, bang, boom. But guess what? No free lunch. There's going to be a string attached. They're going to own everything. And we're not going to own anything. Well, our socks and underwear. That'll probably be about it. The car? Nope, they own it. The house, the apartments, they own them. The condos, they own them. But we're going to have to be good little boys and girls, because the other thing that's taking place right now, and I'm seeing it a lot more frequently, this talk of digital currencies, that governments and central banks are testing them, they want to implement them, they are using them, that is the quote-unquote wave of the future. What is that? You're not going to be able to touch it. It's digital currency. Is this, a part of the Great Reset? To me, this sounds like control. To me, this is basically, okay, well, if I'm correct, and I'm just thinking out loud again, I'll put some more thought into this and we'll talk about it later. But if they forgive everybody their debts, so to speak, and they implement these digital currencies, it really seems like the perfect nightmare scenario where it's complete control. And if you don't behave like they want you to behave, well, then maybe you don't get the $600 check in the mail. You don't get the credit to your account. Or they evict you and they move you down the ladder, if you will, because you're not behaving in the right manner. Don't think this is something that cannot happen. We know China has I don't even remember what they call it, human credit score. You have to be a good citizen. Whatever that means, however they outline it. I know that sounds somewhat conspiratorial, but this is now in our face. They are talking about this openly. I'm just trying to connect the dots. How's it all going to be pieced together? Great Reset, digital currencies, these types. I mean, that's what's coming, unless somehow the people rise up and stop it, which of course would be a revolution, which I'm all for. But that's just something that was on my mind, something I wanted to mention, because we'll have a deeper discussion about it at some point. I'll do some more digging on it, do some more thinking about it. And of course, any of you who have already come across it and have been doing some thinking on it, share your ideas with me, and I'll be glad to have that discussion with you and in the broader audience. But that's it. More cash in your stocking. Christmas ain't over yet. It's at least 600, might be 2,000. Why they don't make it 20,000 is beyond me, but hey, that's why they get paid the big bucks, stealing our money. So that's it. Merry Christmas. Stay diversified. Stay vigilant and stay with the Capital News. I am Alex Karitis. Godspeed.